Good morning, traders. This is Michael coming to you from GammaEdge on Tuesday, May 6th, with our pre-market morning strategy and briefing session. As always, here at GammaEdge, we start with our three pillars: sentiment, structure, and trend. Currently looking at our market trend model based on the tick index. You can research that at any of your favorite investing websites. The main takeaway of the tick index is it is buying versus selling of market participants. We add a time component to it to get an overall trend of the market, obviously giving us an idea of who is in control, buyers or sellers, and we want to be on the right side of the market depending on what our market stance is. The bolded white CT here is our cumulative tick. This is aggregated across the intraday. If it is going from lower left to upper right or in a positive sloping fashion, that means that buyers are in control of the overall market. If it's in a descending or negative sloping fashion, obviously that means that sellers are in control. Then we add a few moving averages here just to evaluate our trend. And then our longer term colored ribbon here is a larger look back period for longer term positioning within the overall market. We continue to maintain this upward positive slope, but yesterday we did see some selling come in the afternoon and crossing below or into our shorter term moving averages. This is just a cautionary state if you're a bull. This would be an area where you would look for some profit taking and then possible consolidation and pullback, as we discussed on our previous pre-market prep yesterday. That is normal market conditions after a significant move to the upside in the market trend model. What we'll be looking for now is consolidation and pullback to the colored ribbon. You see this red is crossing above the cyan. That's a positive slope to the upside. That gives us a longer term trigger for positioning of longer term money and deploying capital in the overall market. Our breadth indicator, new highs versus new lows, continues to be in a bullish state. The green obviously above the red, indicating more stocks are being bought than sold. Yesterday was very flat. It was a low volume, a low liquidity environment. This is our filtered cumulative tick, plus 1,000, minus 1,000 institutional block orders or larger market participants. You see that it was fairly flat, basically oscillating around the zero line. So institutions were really not involved really since last Thursday, Friday. And then on into Monday, really not much involvement. And then our cumulative tick here oscillated around the zero line all day. And then again, like I said, we did see some sort of pullback, a little bit of pullback into the afternoon. So we'll continue to watch that to see if we see a failure of the overall short-term CT, which would indicate we would be a little bit more cautionary and tighten up our stops and take a little bit of profit, and then wait for a pullback to the colored ribbon, which might give us an opportunity to get involved long in the market if the MTM stays constructive, market trend model, as well as our sentiment and structure via the overall options complex. Moving on to the SPX-A, this is our cruise ship, longer term positioning, monthly expiries. This is usually institutional. Looking at the overall structure, we are call dominated. Above and below spot price within the overall options complex here, denoting that this green box here, green net delta below spot price, we do have a significant amount of in-the-money calls below us. Historically, this has been supportive type action on any pullback, so we'll continue to watch these key levels below us at 5,600, 5,550, and then 5,500 down here. To the upside, we do have a little bit of a mixed bag. You see some red and green net deltas. This is still indicating that there's still are some in the money puts above us. Again, this creates a headwind to the upside for price appreciation unless we see a significant change in the overall structure to completely green. Again, this continues to repair itself slowly. So again, longer term institutional money, this won't really flip on a dime as these contracts don't turn over as fast. But again, change it to a call dominated bullish state, supportive in the money calls below us on any pullback. Should be supportive and opportunity to get involved in the market if this structure stays the same. Upside speculation here, noting the net OI, again, dotted with greens and reds. So again, noisy. This is a wait and see approach for speculators to the upside. We do have the speculation, obviously, within the money calls here, but the upside speculation is a little bit more unambiguous. So again, if we see this change to all green without the money call speculation, we'd anticipate significant price appreciation. And notice basically here with the net GEX, we're sitting at zero. Neither direction really has an edge at the moment. So we're at a balance point, most likely heading into the Fed meeting and some other news coming up this week. Moving on to the SPX-A GEX ratio, again, noting that we're above 1. which gives a slight edge to the bulls on the call-dominated area, but again, just basically sloping back down towards that one, which is parity of short-dated call gamma and put gamma. So again, we'll continue to watch this to see if we see the GEX ratio continue to the upside, indicating more call-dated or call speculation is coming in, or do we get back below 1? Indicating that we're losing that call speculation and put speculations coming back into the overall structure and environment. Moving on to the SPXP, this is our cigarette boat. Again, shorter dated contracts, 0 DT as well as weeklies. These contracts turn over much more quickly. Again, we follow the SPX index because it's the largest, most liquid option structure that we can look at for positioning of market participants. Noting that we are put dominated for all expiries now, but the net GEX is basically around 0, indicating there's really no edge either direction, and we're basically balanced. So again, transition areas here will most likely open below the transition area. Expected move is here in the red. We are at 1.2168 points, so the expected move continues to come down. To the downside, again, you'll notice that we are mostly in the money call dominated below us. But we do have the reds and greens continue to dot back and forth, as well as the upside. So again, just a noisy overall structure with the negative, with the net delta. So we'll continue to watch this. Obviously, if you're a bull, you want to see this completely green in the money calls below us. That'd be supportive on any pullback. And if you're a bull to the upside, you'd want to see this green net delta, or this net delta, be completely green, indicating that market participants are speculating out of the money calls to the upside, so that price appreciation is most likely. If we continue to see an erosion of this total net delta, we see more reds overtaking the greens, and obviously we'd be a little more cautious and a little bit more risk off, indicating that we could see a larger pullback within the overall market. Again, key levels 5600, transition area here 5635 to 5640, to the upside 5685, 5700, and to the downside these half and round numbers at 5550 and 5500 to the downside if we do get down towards those areas. Moving on to the sorry, that was the SPXA. Moving on to the SPXP GEX ratio. Again, indicated around the 1 level. So again, we're at parity. Short dated column put gamma is basically balanced. So really no edge either direction for the market heading in, obviously, to Wednesday FOMC. Moving on to the SPXP 0 DTE. Again, we are put dominated heading into today. Again, referencing that net GEX at negative 2010. Really, that's just within the overall noise of the floor. So again, extremely balanced. The expected move 68 points. So this would be our expected move for the day, back and forth. We're going to be opening right around the 5600 level, most likely. And then total OI is extremely low today, so most likely we'll be getting pushed around by intraday trading. That would be 0 DTE flows and mechanically opening and closing of contracts. So it'll be vital to watch our vol M command today. That'll be indicating to us how market participants are positioning and where they're positioning via volume of options contracts. GEX and DEX transition, we have a confluence right there. So really important to the upside. If we're above 5600, 5635 would be that first line in the sand. That would be within our overall drunken sailor range. This is a lower exposure area where we can have a significant amount of chop back and forth. And then to getting above transition, we'd anticipate a move towards the top of the drunken sailor range, 5685, 5690. And then we have that 5700 overhead. You'll notice the red negative net deltas here. That's indicating in the money puts above us. Obviously, price appreciation through these levels will most likely be difficult unless we see a significant amount of out of the money call speculation overtaking this structure. But again, remember, we will be put dominated and will most likely be gapping down below 5600. So all these in the money calls will now be out of the money, which can provide a headwind to the upside also, unless we recover those pretty quickly. So again, we'll move on and we'll talk about our thesis at the end of the day. Again, SPXP delta balance. This is just separating the structure above and below spot price. If you follow this for any amount of time, we separate this to the right-hand plane. This would be the out of the money call speculation. You see it to negative sloping. So obviously out of the money call speculation is decreasing. That leads to that put dominated overall structure we just talked about. And then the left-hand plane, the red, is the structure below spot price. Again, pretty well flat. So in the money calls being maintained. And then the delta balance dropping is not conducive for the bullish case. Obviously, staying above zero is still slightly bullish, but you want to see all of these in a positive slope to the upside, indicating out of the money call speculation, as well as delta balance and in the money calls are moving to the upside. So again, we'll continue to watch that day over day. The SPY obviously decreasing a little bit more rapidly than the SPXP. Again, negative slopes on the right-hand plane. So out of the money call speculation dropping, delta balance dropping, and then the red dotted line is the left-hand plane below spot price. It is barely above zero, but this also indicates that in-money calls below us are dropping, and that this is leading to out-of-the-money put speculation also. We do see projected on out in time a rebound, but again, this is not a crystal ball. It's just what is projected to be on out in time. So we want to watch this right here, which is what is going on right now. So obviously we could see a little bit more weakness in the overall market projected by the structure and the delta balance of the options complex. QQQ, again, same look as the SPY, dropping of the right-hand plane out of the money call speculation, delta balance, which is the combination, and then the left-hand plane, which is below spot price. All of those continue in a negative slope and dropping, even though they're just barely above zero in the left-hand plane. But again, not really a bullish case for today heading into the overall open, so we'll continue to watch that. Moving on to our trading view, this would be our game plan for today. Let me check to see what the open is. So it looks like we'll be opening right around 5,600. Key level for today, obviously heading into the open that we've discussed and about the confluence. To the upside, obviously we have the bottom of drunken sailor range at 56.35. This will most likely be an area that we could get rejected early on in the trading day. So we'll continue to watch that. If we do get rejected here, opportunity to put on a short position, possibly for a move back down to 5,600. If we do retake the 56.35, opportunity to push up towards the 56.50, but overall within the drunken sailor range, this most likely will be very choppy. We'll have to watch our intraday tools vol-m command to give us an idea of the direction of overall market participants. Also remember, very low OI today also though. So again, the movement can be very slow and methodical and may just be choppy for the overall day heading into the FOMC. If we're above 56.50, I anticipate the top of drunken sailor range. That would be the 56.90, 5700 area. Most likely would see some stalling as this is a key TA level and as well as a key gamma delta level at 5700. So again, thesis for today is we really could be stuck within this 5600 to 5700 range. Expected move was 68 points. So really anywhere within this overall trading range, you could just be very choppy back and forth. There's really no direction. So takeaway for today is we're very balanced on the call or short dated call versus put dated gamma and delta, as well as the SPXA, which is the longer term positioning. It seems like all market participants are just waiting for FOMC or news to get out of the overall market. And then what happens after that will be positioning and most likely directional that we'll be able to see and follow. Market trend model is in a consolidation mode, slightly cautious there if we do see a rollover of the market trend model. So most likely less trading is more today until we get through Wednesday and FOMC. That would be overall advice for today. So thanks everybody for joining us. Make sure you check us out on X as well as YouTube. Sign up for our free newsletter. It comes out every weekend. A significant amount of education there, as well as our GammaEdge framework, which is our overall education course for options, as well as our GammaEdge tools. Thanks everybody. Make it a great day.